Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just broken above a quite significant structure level. In fact, this zone was acting as previous monthly support, which the market broke to the downside. And at that point, that previous support was turned resistance. And we also had the creation of this M pattern, after which we could expect this move higher. Now, the move to the upside came and broke also back above this previous level of support, which is now once again acting as support. So in a situation like this, we could expect a retracement to this area, inside of which we could see institutional longing, which at that point would further increase the probabilities of a potential move higher. That is something that we will be speaking about later on during the analysis when we check the COT data. Dropping down on the weekly time frame, what do we have? Now, from a weekly standpoint, the price action that the market has been creating here is extremely clear. The first thing that we have to keep in mind is that this was the previous demand and support. In fact, from here, all this previous rejection to the upside was created. The market then melted exactly into this area, also with the creation of an overextended M pattern. And what we know is that after the creation of an overextended M pattern, we have a high probability of getting a rejection to the upside for the completion of the M pattern at the neckline. And we also knew that this was previous demand and support. So this move to the upside from here was pretty much expected. In fact, I did make a full breakdown on gold when the market was here, explaining all the reasons for which we could expect this rejection to the upside. Now, in creating this move higher, the market has also broken once again structure. In fact, what we know is that this level here, this is previous weekly support, which now that the market has broken it once again to the upside, is again acting as support here. And as we just got a very strong impulse, after an impulse, what we could expect is a correction and then to get more potential bullish continuation. Now, if you look at this from a pattern standpoint, and you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have precisely the 0.32 Fibonacci retracement lining up exactly with this previous support, which creates confluence of support at this level that we could expect this, in fact, this market to go and test and then to reject to the upside. Dropping down on the daily time frame, what do we have? Now, from a daily standpoint, first of all, as I was saying previously, I did speak about gold quite a few times in the past. I spoke about it when the market was here and explained all the reasons for which from here we could expect this rejection to the upside. Then we had the creation of this red candle and explained all the reasons for which I expected a retest of this red candle. And exactly that is what the market gave us. Then we had the rejection higher, and from here I made another breakdown explaining all the reasons for which we could expect a correction and then more bullish continuation. And again, that is exactly what the market gave us. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, as I was saying previously, we just got a massive impulse to the upside. However, in creating this move to the upside, the market has also now printed this red candle here. This red candle from a daily standpoint, if we consider this structure, which it is previous daily resistance, which is now turned support. Now, as we did previously on the weekly time frame, since also here we have an impulse, if we want to measure a potential correction after this impulse, Also here we have to take our Fibonacci from the low to the high of the impulse leg, and we can see how we have the 50%, 0.618 and 0.786 retracements lining up both precisely with this previous resistance turn support, which means that actually we have confluence of support in this area, inside of which we could expect the market to find institutional buying, which at that point would further increase the probabilities of a potential move higher. Now, why do I say institutional buying? Because we have the new report coming out tomorrow. I'm speaking about the COT report. And what we can see from the previous report is that we had 11,000 shorts added and 8,000 longs getting closed. However, as I already explained in the previous analysis, what we had here, if you look at it, is exactly this red candle here. Now, all this huge push to the upside came after the report was released, showing how there is a high probability that actually, in this specific instance, institutions have manipulated the report by starting to short and closing longs exactly what this candle when they were forced to report their positioning, and then just after they reported their positioning, they completely shifted it and started longing. And in fact, we had a massive move to the upside. And in fact, with the report that is coming out tomorrow, I really do expect to see longs getting added and shorts getting closed. And this means that if we will see another test of this confluence of support, that will even increase the longs and the closing of shorts, because this is a confluence of support area, is an area inside of which we could expect to see more longs added in the institutional side of the market, which at that point would further increase the probabilities of a potential move higher. So if we will see new longs added from an institutional perspective with the new report tomorrow, so net positions getting increased, and the market will go and retest this confluence of support area, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment the time to join with this current special promotion is starting to run out, so I really suggest to go and check it out as soon as possible. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest to go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I'll see you in my next breakdown.